This week, Representative James Hill reported the sale of his Blackstone shares valued between $100,000 and $250,000. The transaction took place on June 23, but wasn't disclosed until July 25, over a month later. What makes this trade particularly funny is what happened after he sold. Blackstone's stock surged from $138 to $178, a 28% gain he entirely missed. Wall Street golden rule: the moment you sell, the stock remembers its true potential. From missed profits to political pressure, President Trump made an unexpected visit to the Federal Reserve headquarters this week. Officially, the visit was about touring the Fed's $2.5 billion renovation. Unofficially, it was about pressuring for rate cuts. According to multiple sources, Trump used the opportunity to urge Fed Chair Jerome Powell to slash interest rates. The timing is no coincidence. The Fed is set to meet on July 30, with markets expecting rates to hold steady at 4.5%. This isn't Trump's first jab at Powell. He's repeatedly criticized Fed for keeping rates too high and blames Powell for slowing growth. Looser monetary policy is a key part of Trump's 2026 campaign narrative. In a somewhat awkward moment during the tour, Trump accused the Fed of overspending, claiming the renovation cost $3.1 billion. Powell corrected him, noting that the figure included unrelated, already completed projects. The moment underscored Trump's ongoing efforts to discredit Powell's leadership, though in this case it may backfire. We also saw this week major companies releasing their quarterly earnings. Tesla reported $22.5 billion in revenue, representing a 12% year-over-year decline from $25.5 billion in the same quarter last year. Operating income, net income, operating cash flow, and free cash flow all declined significantly. Despite the disappointing results and initial 8% sell-off, the Tesla stock managed to recover by almost 5%, driven by renewed investor optimism around the company's robotaxi initiative and future vehicle lineup. Furthermore, Tesla confirmed it is on schedule to begin production of a more affordable Model Y-inspired vehicle by the end of 2025. Alphabet released its second quarter results on July 23, delivering strong performance across the board. The company reported revenue of $96.43 billion, beating analyst expectation by $3.92 billion and marking a 13.8% year-over-year increase. Earnings per share came in at $2.31, exceeding estimates by 6 cents and growing 22.2% year-over-year. Alphabet's ongoing integration of artificial intelligence into its product, particularly search, is paying off. The AI-powered search platform is showing significant global traction with growing user engagement and more complex querying handling. The company's AI overviews feature now serves over 2 billion users, highlighting widespread adoption. Google Cloud continued its upward trajectory, posting 32% year-over-year revenue growth in Q2. Alphabet raised its full year 2025 capital expenditures guidance to $85 billion, an aggressive increase that signals heavy investment in AI and cloud infrastructure. Analysts continue to issue positive outlooks, citing the company's robust performance in search and cloud, along with its disciplined approach to scaling AI capabilities. Lastly, we are talking about Nana's favorite cursed grandchild, Intel. The company released its second quarter earnings on July 24, showing mixed results and deep structural challenges. Revenue came in at $12.86 billion, beating estimates by nearly $1 billion, but representing minimal year-over-year growth of just 0.2%. Earnings per share came in at a loss of 10 cents. Following the earnings release, Intel shares declined by -8% on the next day. Intel announced plans to eliminate over 25,000 jobs, approximately 15% of its workforce, as a part of an aggressive cost-cutting strategy. The company also cancelled major expansion projects in Germany and Poland, choosing instead to concentrate resources where customer demand is confirmed. That wraps up this week's market update. If you like clear breakdowns of key market events, let me know in the comments. And if you want real-time alerts from earnings to breaking headlines, check out stocknear.com. It's the platform I built to help retail investors stay ahead of the curve. Link in the description below. Thanks for watching, and I'll catch you in the next one.